Good morning, winners. Welcome to Terry's Tips. Happy Thursday. So listen, today is a big one. FICO scoring changes. The changes going on with FICO 10. If you want to know more about your credit scores, about what goes into your score, and how these changes are going to impact you right now, then you need to watch this video in its entirety, okay? So let me introduce myself. If you are new to my channel, welcome, welcome, welcome. I would love for you to be a subscriber, to like, to share, to comment. Every Tuesday and Thursday morning, I post free information on my YouTube channel about personal credit, business credit, financial literacy, real estate investing, just breaking generational cycles of poverty through education, through financial literacy, through learning how to leverage your credit to build wealth. And so if those are areas that concern you and you're trying to get better at, then I would love for you to be a subscriber. Like, share, comment. I'm super engaged with my audience. My name is Terry and I am a self-employed entrepreneur and I own a consulting firm that focuses in all of those areas. And before I jump right in, guys, I am a credit expert. I used to work for TransUnion. How many people can say that? Not many. So this is not a new kind of trend for me. This is not like a new kind of hot thing to be in credit. I have over a decade of experience. I've helped thousands of people across the nation. And I'm also board certified. I'm score certified. I am the credit coach for Make Real Estate Real. And so I started my channel to start to help you all with this financial literacy, with improving your credit, with getting to your goal. Amen? All right, so guys, FICO 10, it is coming soon. And so what you guys don't realize, let me first just break down what does that even mean, because some of you guys are like, what is FICO? What is 10? What does that mean? So FICO scoring model is basically a scoring model that lenders use to rate you. So it's intended, all scoring models, to be honest, are intending to assess the risk in lending to you. Did you hear me? Assess the risk in lending to you. And so even with the FICO 10 scoring changes, and sometimes you hear it's called FICO 10, FICO 10T, same thing. They're looking more at trending, and I'll talk about that. Your scoring model is still going to, in general, range from a 300 to an 850. 300 to an 850. So that's about the range. Obviously, creditors, a higher credit score means you are a lower risk. And a low credit score means you are a higher risk. So in general, anything a 700 and above is great. In general for a lot of real estate financing, and some lenders will still lend to you if you're like 640, 650, 660. But, anything 500 and under, you have credit challenges. You're going to have some difficulties, even 550 and under, to be honest. You're going to have some issues. And so you always want to at least be 600 and above. 700 and above is even better. Okay. I want you to have at least a 650 as your benchmark goal for most good financial options and financing options. And so for FICO 10, it is still going to cover the basic 5 categories. So guys, this is a great time for you to get a notepad and a pen, because I'm going to break down scoring models for you. I'm going to break down the changes for you. And then I'm going to give you some tips on how you can improve your credit. Okay. So the 5 main areas, FICO 10 is still going to focus in those areas. That is amount owed. That is payment history. That is average account length. That is credit mix. And that is also utilization, okay, and new accounts. So those are the main areas that FICO in general, all the scoring models kind of look at. Those kind of buckets are still going to be the same. So amounts owed is like the balances on your credit card, your revolving debt. Your payment history is, do you pay your bills on time, or do you constantly have late payments or things past due? Do you have collections, charge-offs, repo? Credit mix, that is your revolving credit and your installment credit. If you have all revolving and no installment, you are not going to have a high score. If you have all installment and no revolving, you're not going to have a high score. You have a better credit score when you have a better mix. Some revolving, that's like credit cards and lines of credit, and some installment, that's like personal loans, student loans, car loans, mortgages, things that is one set amount and there's a set payment every single month. Whereas a revolving, you have a limit and your balance can be different every single month depending on how much you use, like a revolving door. Average account length. So do you have accounts that have been open 3 years, 5 years, 10 years, 20 years, or are all of your accounts 3 months old, 5 months old, a year old? So lenders like to see an average account length, long, like 2 years, 3 years and above is where you're actually starting to establish a solid payment history. So that's where you're actually showing lenders that you can manage your debts well, okay? And then like new credit, they don't like to see that you're applying for new credit and you just got a credit card a month ago, and then a loan 2 months ago, and then another credit card and a car 3 months ago. They don't like to see a whole bunch of new debt. So get the items that you need and then manage them well and be super strategic, guys. You know, that's what my brand is really about. Be super strategic about what it is you're actually applying for. Now, let me first explain this too. So we're talking about the changes for the FICO 10 scoring model. So many of you come to me and you're like, I don't understand why my scores are different. I don't understand why, Credit Karma, which I said that that's the devil and that's a whole nother video, or my bank thing, or my bank score, my score with my bank, or Identity IQ, or my FICO. Sometimes you guys don't understand why you're looking at your score online through consumer websites, but then when you go to apply for credit, your score is different. So let me explain. There are different scoring models. So even like with FICO, there's FICO 8, there's FICO 9. Now we're talking about FICO 10. FICO 10 is going to be released this year. What year, Terry? This year, 2020. It's about to drop, okay? That's why I'm doing this video for you guys, because it looks like it's going to actually be released the summer of 2020. So you still have some time to get things together, okay? Get it together now. Because what we're seeing with FICO 10 is that if in general, if you're a 680 or above, you may actually see an increase. People are rewarded with FICO 10 for having good trends. That's where you get the T from. So they're looking at more trending. What is your trend? Do you always have late payments? Do you always carry balances? What has been the trend for you overall looking at your history? And the goal was to help lenders better assess the risk in lending to you, so that hopefully they're giving credit to people who pay the credit back, as opposed to giving credit to a bunch of people, then everything defaults, okay? And so the FICO, there's different versions. So the website I like to explain it to you guys, if you think about Windows, there was Windows XP, there's Windows Professional, there's Windows 5, 6, 7, 13, all these different versions of Windows. And they're all Windows, okay? But every single version had like different nuances, different changes, different features. Think of FICO 10 the same way. There's FICO 8, there's FICO 9. Now they're releasing FICO 10. So in general, like I said, the 5 buckets are still going to be the same. The 5 main areas that they look at. However, there are different kind of changes, different shifts, different trends that are going to be rated differently. So guys, I hate to tell you, look, I'm trying to help you guys, love. I've been giving you information for a while about your credit, that if you are making payments late and have high credit card balances, it's going to hurt you more severely. So what we're seeing is that if you're a 680 or above, the new FICO 10 scoring model may actually give you a bump. So it may actually increase you. It's going to reward you for having positive trends. If you are somebody that has recent delinquency, high credit card balances, missed payments, it's going to impact you more severely. People that are like a 600 and below, that probably when FICO 10 comes out, you're going to be even lower. Did you hear me? Even lower. Okay. And so with the biggest thing with FICO 10, and I've been saying this to you guys, I was trying to prep you. They are rating like the last 24 months. They're really rating that time frame more heavily. They're trying to see, how do you manage your debts right now? How financially responsible are you right now? And so I have actually been telling you guys that, look at all my videos. I've been saying that, but now it's really, look, it got real, okay? It got real. Like they are actually rating that more heavily now. And so any recent late payment is going to kill you. So, and I've said this in other videos, your open available credit factors more heavily into your score. And I've always said the last 24 months factors have more heavily into your score. With FICO 10, it's even more prevalent. So your open available debt, your credit card balances, your utilization, and any delinquency is going to be rated more severely. Those are the major changes. They are looking at trends. So even like if you are somebody who pays your balances off every single month, as opposed to somebody who carries a balance every single month, they're even going to look at that information. They're looking at more historical data, trends. They're looking at more historical data, trends. How do you pay your bills? And so paying your balances off is going to help you with this new FICO 10 scoring model. Not carrying high balances is going to help you more with this new FICO scoring model. Not having late payments is going to help you more with this new FICO 10 scoring model. And so, and I got off track because you guys have been asking me about like why your scores are different. Different lenders can use different versions. So you can apply with American Express and they can use FICO 8. And you can apply with Discover and they could be using FICO 9. And so even that varies, the version that the lender you're applying with is using. The other thing is that different lenders rate you differently. Guys, you literally have hundreds of credit scores. When you guys come to me and you're like, I'm a 710 or I'm a 680. I'm like, no, you're not. That is one score. I don't know what scoring model. I don't know what bureau. I don't know what kind of algorithm. Like, it's just supposed to be a guide. Understand that you are going to be rated differently depending on if an auto lender pulls your file, if it's a credit card company pulling your file, if it's a mortgage lender pulling your file, if it's for a personal loan. So the different lenders have some of their own algorithms and things that they rate differently. And then there's also different scoring models. FICO 8, FICO 9, FICO 10 coming out. Guys, this is a big, big deal. There's been articles written about it. There's a bunch of videos going on about it. I try to break things down and give you solid information so I can prepare you. But this is the biggest change since like 2014. Like seriously, the biggest change since like 2014, where FICO, Fair Isaac is the parent company. FICO was like the abbreviation for it, is really trying to help lenders better assess risk so they can have better results when lending to people. And so that's one reason why you always have different scores, is because the different versions of FICO, depending on the lender and what version they're using, the type of lender. So lenders, you know, a mortgage company is going to rate you different than a credit card company. And then also the bureau. So remember, there's 3 national credit bureaus: TransUnion, Equifax, and Experian. And the lenders report the information to the bureaus. So big companies, Macy's, American Express, Capital One, Credit One, Wells Fargo, Bank of America, they report to all 3 bureaus. So if you have an auto loan with them, it's probably going to be on all 3 bureaus. If you have a car with them, it's probably going to be on all 3 bureaus. If you have a credit card with them, it's probably going to be on all 3 bureaus. But some smaller banks, even like Santander's and credit unions and buy here, pay here places and all kinds of different things, there's other lenders who only report to 1 bureau or only report to 2. So if you think about that, the FICO scoring model rates the information on your credit report. Let me say it again. All of the FICO scoring models, all of the scoring models, period, rate the information on your credit report. So if your TransUnion account has 10 accounts and your Equifax credit report has 9 accounts and your Experian credit report has 12 accounts, how can your score be the same? It's going to be different because the data on your report is different. So just get into your head that no matter what, you have multiple scores depending on the bureau, depending on the version of the scoring version that they're using, and depending on the type of lender pulling your file. So it is imperative that you guys kind of get together your payment history and your utilization right now. If you don't understand what utilization is, real quick, utilization is the balances on your credit cards. If you have 5 credit cards and altogether the credit limits are equal $10,000, and altogether all of your balances equal $5,000, that's 50% utilization. You're going to be rated more heavily now, guys, with the FICO 10 scoring model, and I've been saying it anyway. A good utilization ratio is 30% or under. So it looks at the balance in relation to the limit. The balance in relation to the limit. Let me take one credit card. You have a $1,000 credit card. If the credit limit is $1,000 and your balance is $500, you are at 50% utilization. Your score is going to drop. Now, let's say you have a $1,000 credit card and the balance is $200. That's 20% utilization. Your score, that's responsible usage. That's good credit utilization. Set a goal, guys. Write this down. 30% utilization or under. I would rather it be 20% to be honest. 20% or under. The new scoring model is heavily rating your balances. It's also going to be looking at your payment history. So how much you're putting on the cards. And these late payments, guys, they're killing you. So in my coronavirus video, I talked about that if money is an issue, if you have a credit card, and let's say it does have high utilization, and you just don't have the money to pay it. Listen, I get it. If you have to choose between dinner and gas in your car or paying your credit card bill, sometimes money is tight. Sometimes you have been impacted by something personal in your life. Sometimes you've been impacted by COVID-19. I get it. Listen, I am a mother and a Christian first, okay, before a credit expert. So if I have to choose between paying a credit card bill and feeding my kids, what do you think I'm going to do? But my advice to you is that if you just at least know the minimum payment. So say on that credit card, it says $25 minimum payment. If you just make your minimum payments, guys, then at least you will not get new late payments on your credit report. Remember, the credit bureaus and the creditors cannot report you to the credit bureaus unless you are 30 days late. Write that down. I'm not sure you guys understand that. You are reported to the credit bureaus after being 30 days late. So if your credit card bill is due on the 1st of the month and you pay it on the 15th, yes, you are late in their system. Yes, the company knows you are late. Yes, you may get a late fee, but you're not reported late to the credit bureau. Did you hear me? You wouldn't be reported late until after the 1st of the very next month. So say your credit card bill is due May 1st and you pay it June 15th. You are reported late to the credit bureau because that is over 30 days late. Same scenario, your bill is due May 1st and you pay it May 25th. Then you are late in their system. Yes, the creditor knows you are late. Yes, you may get a late fee, but you are not reported late to the credit bureau until you are over 30 days late, okay? That's your right. Like they don't report until 30 days. And so sometimes knowing when your bills are due, knowing when they report to the credit bureau, and knowing you have a little bit of a cushion. I don't want you guys to get used to that cushion. That's why I don't talk about it much. But in this video where I'm just trying to give you guys some tips and make you aware, I just want you to know that you cannot be reported late to the credit bureau until you are 30 days late. Make at least your minimum payment and know that now the trends are going to impact you more heavily. The trends are going to impact you more heavily. And so they're looking heavily at the last 24 months. They're looking heavily at credit card balances. They're looking heavily at credit card utilization. And they're looking heavily at any kind of negative information. They're looking heavily at the last 24 months. So my advice to you, so what can you do? Start working on your credit now. Look, right now. If you're struggling now, FICO 10 is going to be a disaster for you. It is going to hurt you even more. So really focus on your open credit cards first. Focus on your utilization, and at all costs, remember, one late payment can drop your score up to 100 points. One late payment can be reported for 7 years, guys. 7 years. These late payments are killing you. You can't expect a lender, say you're applying for a mortgage, and the mortgage payment is going to be $1,000 a month. And right now you have a car note, and the car note is $250 a month, and you're late on it 2 months ago. Do you think the lender wants to give you $1,000 mortgage payment when you were just late 2 months ago and your car payment is $250? No, like some of you guys are really missing it when you come to me for credit repair and I've repaired your credit, and then you guys in the middle of it have brand new late payments. It literally washes away all the work I just did. It drops you 100 points. Like I might as well have just you literally, all the work, all the letters, all the phone calls, all the faxes, all the education, everything just went out the window and we're back to square one. Literally. And so my best advice to you is right now, I've said this a million times, I'm going to say it again. You get free free credit reports from annualcreditreport.com. Now is the best time than ever. Go to annualcreditreport.com. Download your TransUnion, Equifax, and Experian report. Save it as a desktop. Save it to your desktop, to your computer, to your laptop, whatever. Look at your accounts. Bring your balances current. Pay your utilization down. Make sure you don't have any late payments. And start now. If you need help, reach out to a credible credit repair service or person. Yes, I do help with personal and business credit. I do credit jumpstart strategy sessions where I help you guys kind of focus on what to do. I give you guys a game plan, and you can actually do it on your own for a much lesser investment than actually investing in my full credit repair services. I try to put resources out there, guys, to help you kind of manage this. But just know that FICO 10 is coming. Look, it's being released. Some people say the end of 2020. Some people are saying summer 2020. We're months away, literally. Now, just because FICO 10 is being released, that does not mean that all lenders are going to adopt it. There are still lenders who use FICO 8. So, it's going to be a trickle-down effect when everything is kind of, whenever there's a new product kind of introduced, all lenders may not jump on board. Some lenders may be like, I'm using FICO 8 or I'm using FICO 9. It meets my meets my needs. If it's not broke, don't fix it. So they're not going to change. But other lenders are going to jump right on it. So remember, the scoring model is going, let's recap. The scoring model is going to be basically the same. The 5 buckets of things that they're focusing on. FICO 10 is going to look more at trends. It's going to look more at the last 24 months. It is going to rate your credit card balances and utilization more heavily, and it's going to heavily rate your credit your late payments. The other thing is that the model range is still going to stay about the same, about 300 all the way up to like an 850. Guys, you want to have a 680 or above. That really should be your goal for personal and business credit. Do it the right way one good time, and then you will have it forever. And just know that you have different scores based on the type of lender, based on the version that they're using, and based on the bureau that they're checking. So for, my brain is super focused on real estate investing. So for real estate, they check all 3. So you need to do the work for all 3. During COVID-19, annualcreditreport.com is giving out free copies of credit reports all the way until April 2021. There's no excuse. Get started right now. Pull your credit report, know it's on your file, make a plan, work the plan. What do I say? Make a plan, work the plan. Amen? All right, you guys got this. You got this. And if you need help, reach out to me. We'll do a strategy session. If you need personal credit repair, I will enroll you in our system. If you need help with business credit, I'll enroll you into our program. Let's get it together, do it the right way, and then maintain it and grow it. And then you will have a life of legacy because you're going to invest and put it into things that are income producing. And this will all just be a thing of the past for you, okay? And so I hope that was helpful. I would love for you to like, share, comment. I would love for you to be a subscriber. And you guys, I'm looking forward to celebrating so much more of your success. Have a blessed day.